Welcome to the 12th episode of the Road to 1 Million project. I'm glad to have you back. If you're new to the channel, this series is all about my journey to grow a $20,000 trading account to $1 million. In this video, I'll be discussing how my Bund Future Trade played out and why I've now entered a new position in the S&P 500. I believe the market may have found its lows, and I'm expecting a potential recovery from here. All the details right after the intro. Welcome back to my trading screen. In the top left chart, you can see the Bund Future. The purple box at the bottom marks the support zone around 126.70, while the green box at the top represents the resistance zone at 128.20. My idea behind this trade was that we had formed an inverted hammer in the green box, which is typically a reversal signal after a downtrend. I expected the market to bounce off this level and push toward the upper range boundary. However, the market struggled to gain momentum. After an initial move up, it quickly sold off again, then tested the highs once more, but was rejected once again. Unfortunately, I only moved my stop loss slightly, and with the last downward move, I was stopped out at 126.80 points. Since my entry was at 127.12 points, this resulted in a loss of 36 points. With each point worth 10 euros and 3 contracts in play, this trade cost me 1,080 euros. The trade simply didn't play out as expected, and the price action remained very choppy. Maybe I should have moved my stop loss earlier to reduce the risk, but at the same time, I didn't want to place it too close within the range, as that could have resulted in a premature stop out before the actual move up. At the end of the day, this trade didn't work out. But that's part of trading. We trade probabilities, not certainties. The inverted hammer initially triggered a strong move up, but ultimately, we can't control how other market participants react after we enter a position. Since then, my performance has been moving sideways, fluctuating between $23,000 and $25,000. I'm curious to see when I'll be able to challenge the all-time highs of my trading account again. Now let's take a look at my S&P 500 future trade. I have now switched to the June contract, as the March contract is about to expire, and I might hold this position for a longer period. Seasonally, we are now entering a strong bullish phase from mid-March through May, which historically has shown positive market trends. Given the recent 10% sell-off in the U.S. markets, I was actively looking for a long entry, hoping to capitalize on this seasonal strength. Additionally, there is a lot of fear in the market right now, making it possible that we have already seen the lows and could be setting up for a bounce. One key indicator supporting this idea is the Fear and Greed Index, which has recently hit extreme fear levels. Historically, when fear is at its highest, markets often find short-term bottoms before staging a strong recovery, possibly lasting through the summer. In the June S&P 500 contract, we have seen the market form a range between 5,700 and 5,600 points. From March 10th to March 13th, the market traded sideways within this range. However, on the afternoon of March 13th, the market broke below the range, but failed to continue the downtrend. Instead of further selling pressure, buyers stepped in aggressively, pushing the market back inside the range. This lack of follow-through selling indicated that prices at this level were attractive for buyers, signaling a potential reversal. The move was further confirmed by a bullish engulfing pattern on the hourly chart. Based on the price action, failed breakdown and immediate recovery, the bullish engulfing pattern confirmation, and the seasonal trend from mid-March to May, I decided to go long at 5,601 points with 6 contracts. I initially placed my stop loss below the lows of the bullish engulfing pattern, but I have already moved it up to 5,575 points to reduce risk. So far, the position is off to a great start, currently up $1,000. My idea is that we will first test the upper range boundary at 5,700, possibly trade sideways for a while, before eventually making a strong move toward 5,800 points in the June contract. I'm curious to see if this was really the bottom and whether the market will continue its bullish trend from here. If you enjoyed this episode and like the Road to 1 Million series, make sure to subscribe to my channel. Also, let me know in the comments, do you think we've already seen the lows in the US markets, or do you believe there's still more downside ahead? I'd love to hear your thoughts and discuss the market outlook with you. Looking forward to seeing you in the next episode.